Good afternoon, everyone. On behalf of ASSOCHAM, I welcome you all to this virtual conference, Building Resilient and Consumption-Based Finance Operations. To start, can I request Ms. Richa Mukherjee, the Co-Chairperson of ASSOCHAM National Council on Fintech, to kindly give the welcome address. Over to you, Richa ji.
Thank you to each and every one of you for being here with us today at ASSOCHAM webinar on a building a resilient and consumption-based finance operations. On behalf of us, very pleased to welcome all of you at the webinar. Before we get started, I would like to express my appreciation to you who generously made even come live today. Let's talk about how the businesses have been impacted. We all know these are the unprecedented times unabated in the country and across the globe. As we speak, India continues to rise in daily cases. The overall infections have been hovering around 5.5 million cases. There has been intermittent lockdowns which have been implemented in multiple states, expected to impact businesses, and costs are under severe and tight scrutiny. The result of all of this have to be reinitiated and services have to be discontinued. There has to be a fresh focus on new segments and further cross-sell opportunities have to be created to increase stickiness and grow volumes with the customers and the merchants overall. And that's what I'm doing exactly. It's transforming and reevaluating our finance operations and business models to manage the challenges brought about by it. Operational resilience, it comes handy as operational resiliency is a non-negotiable. The resilient and consumption-based finance operation one needs to cater to both internal and external stakeholders. The people are structure these days that has become extremely critical to provide digital payment services, recurring and to withstand the exogenous shocks such as COVID-19. Resiliency must now be at the core competency for every organization. Operational resiliency can only happen when players in the ecosystem bolster their infrastructure by expanding capacity or investing in new resources to withstand the stress to the systems from higher transaction volumes. For internal processes, there are many ways which can lead to resilient finance operations, whether it is sharpening productivity, reallocating resources, collaborating in communication with the stakeholders, and of course, determining the next steps for businesses. Resilient finance operation process is put in place to meet the future demand of consumers. It sets the solid tone for business resiliency as well. Now, if we ask how the finance function is evolving across the industries, I would say on three counts essentially: by leveraging data, by being a strategic partner, and by bringing it all together. Leveraging businesses becomes more and more complex. Finance, through its insights, provides the businesses a strategic edge in many ways. Like finance now more than ever leverages data and analytics for forecasting demand and profitability, leading to better resource allocation. It provides real-time reporting, which enables faster and more data-backed decision making. It ensures optimal decision making is practiced and benefits at the portfolio level are increased. They are also considered rather than just at the level. On finance operations being a strategic partner, the focus in finance team now is to ensure that the organization is prepared to handle any potential risk, which means that the robust controls are followed across the organization. Finance function is able and is prepared to handle any regulatory and macroeconomic changes, which is happening a great deal currently. It is also, the strategic partner being able to act as a strategic partner that handles the external stakeholders, supports their requirement for compliances and data. So in effect, it finance operation, it acts as the harbinger of bringing it all together. It works on all aspects of economics, profitability, and this is so imperative to ensure decision making is not based on short-term profitability, but long-term resilience. It also ensures that there is continuity and alignment across teams and business benefits from transactional synergies. So overall, it implies that the finance has to assume the long-term view of covering end-to-end processes, including the leeway of people working from home and international mobility. So that's my brief comment on life. I don't want to take much of your time. We have upcoming embellished set of panelists ahead to discuss in more details on this. Thank you very much for listening, and let us welcome our next speaker. Thank you very much.
Thank you, Richa ji, for the opening remarks. Can I request Neeraj Manik ji to kindly give the IBM's point of view? Mr. Neeraj Manik is the business leader for IBM's process services and reengineering business across Asia Pacific and China. At IBM, he is directly responsible for PLNL, sales, consulting, and delivery of enterprise transformation and intelligent automation services across finance and procurement, talent, and industry-specific processes. Over to you, Neeraj ji, for your address.
Varun, thank you very much for the introduction, and thanks ASSOCHAM for inviting me for this session on building a resilient finance organization. Richa, your opening comments were spot on, and I'm hoping everybody can see me. And Varun, if you can give me control of the slides as we go through, it will be helpful as well. So if you can allow me to share.
Yes,
So,
just give me a second.
yeah. So while the slides come up, we are at start of the next big shift in business architectures, driven by pervasive application of exponential technologies to core processes and workflows of the organizations. This generation shift will take the digital wave that the businesses are currently surfing to the next level, to transform the way the employees add value and corporations sustain their differentiation. The CFO and the finance organization are also, a key part of that. And when we look at the CFO organization at any enterprise transformation initiative, the finance organization is leading the way by owning operational processes, curating proprietary data, and reinventing its workforce to deliver expectations in real time, on the spot forecast and encompassing foresights. CFOs who accepts the challenge with this kind of a change and a dynamic environment are the ones that we have on the panel. So I'm really excited about that. If you look at the comment on the chart here, two-thirds of the CFOs we surveyed confirm the agenda for finance organization includes developing strategy, driving growth, reducing cost, managing risk, and providing insights. There are three legs in terms of how resilient finance organization comes to life. Firstly, the workflows are becoming more intelligent, end to end. The whole life cycle of identifying a potential customer, converting the lead, managing orders, all the way up to predict cash collections can now be managed seamlessly, enhancing customer experience and allowing enterprise to create new business models. Secondly, the delivery of these intelligent workflows is now brought to life in a dynamic operating model, which we call as smarter operations, where team members have tools to collaborate virtually while being assisted by prescriptive and actionable insight. The smarter operations and agile ways of working result in higher productivity, continuous improvement, and an engaged workforce. Most importantly, all of the things that I talked about are possible with number three, exponential technologies like AI and automation. With data at its core, finance organizations can now transition away from being what we call as scorekeepers to growth drivers for the enterprise. Let me now share a few examples on how enterprises are leveraging these capabilities to drive resilient finance operation in today's times. So the first thing is that the intelligent workflows, as we call them, they thrive at the intersection of industries and business functions. Let's dive into some examples. Pepsi. We partnered with Pepsi to roll out SAP back in the days. The next conversation with the client was, let's set up a new target operating model. Then over the past decade, we partnered with them to completely redefine finance operating model for India and also globally. With full breadth of capabilities, Pepsi has been able to shrink close cycle time from 5 days to 2 days, improve delinquent AR by 30%, and reduce cost of finance operations by 50%. Next is the Korean giant electronics company. With a broader slowdown in the electronics industry combined with COVID, US China trade tensions, operating profits are down by 50% or more. The CFO organization was looking for a new operating model design. And with the help of ecosystem partners like TradeShift and Automation Anywhere, we set out on a project. The project was implemented in a record 6 month time frame with the setup of two strategic shared service centers across two different countries, including India, and providing state of the art capabilities. So far, we have gone from 0 to 70% on e invoicing penetration, but more importantly, created resiliency, which allowed us to move 100% of the workloads into dynamic delivery during the COVID lockdown. The client feedback is quite evident and kind of on the chart for you to read. The third example I have is on Singapore Airlines, one of the world's favorite airline. The travel industry obviously has been hit very hard. When the first time lockdown happened during the pandemic, SI had to cancel many flights and process refunds. While all staff members were not allowed on site to access the data they needed, and we worked with SAIA to make sure employees can work from home and manage the spike in transactions seamlessly. Now, taking a step back, IBM's journey with Singapore Airlines started way back in 2005. Over the last 14 years, 15 years, we have been working with SI on the journey to become industry leaders in terms of how finance function is transformed. Across all their stations, wherever they fly to, and across all their brands, including Scoot and Silkair, IBM worked with SIA for over 3 generations of software, reduction of 50% in accounting headcount, increase in productivity, maintenance of 99% SLAs, 100% compliance, and that's one of the comments that Richa made earlier on audits. And even our NPS is at 100% as we end up this year during the pandemic period. So these are some of the stories, right, in terms of how we are bringing to life resilient operations in a consumption-based manner, where partnering with clients, delivering outcomes. And with that, I'll turn it over back to Varun to launch the panel conversation. Thank you.
Thank you, Neeraj ji. Can I request Ramit Gupta ji to kindly start the panel discussion?
Hi, good afternoon, everybody. Am I audible well, Varun, and everybody else?
Yes, please.
Okay, good. So thank you very much. I think it's a great afternoon. Thank you everybody for finding time and coming together for this panel discussion on building a resilient and consumption-based finance operations. This conversation could not have happened without the panelists which we have. I mean, we have a blockbuster panel team on the table. And without further ado, let me just go down quickly introducing everybody. But before I do that, my name is Ramit Gupta, and I'm a partner with IBM Services, and I run the CPS business for IBM in India. So our first panelist, which I could call upon, Mr. Subramanium. He's the CFO at Titan Industries. Mr. Subramaniam has been with Titan for around a decade, and in his overall 25 years of experience, he spent a fair bit of time with the telecom industry, including companies like BPL, Mobile, and NSR. Thank you, Mr. Subramaniam, for being on the panel today. Next, I'll call upon Mr. Aditya Pandey. Mr. Pandey is the CFO of Indigo Airlines. I think we heard Neeraj talk about one industry which was quite badly hit, if I may say so, during the pandemic. Mr. Pandey has over 30 years of experience, and he has spent a lot of time with many different kinds of organizations, right from Arthur Andersen to GE Healthcare and Genpact. I also have the pleasure of inviting Mr. Nitin Parekh. He's the CFO of Cadila Healthcare Limited. Mr. Parekh, besides being the CFO, is also in charge of IT and legal functions at the group and has more than 35 years of rich experience to really bring to the table. Accompanying Mr. Parekh from the same industry, we have Mr. Ramesh Swaminathan, who is the Executive Director, CFO, and Head of Corporate Affairs at Lupin. Again, 30 years of experience. And besides being with Lupin for over a decade, he has spent a lot of time in leading companies like VST, SPIC Group, Standard Chartered, Henkel, and L&T. We also have on the panel Mr. Swapnesh Maru, who is the Vice President, Toyota Motor Corporation. Mr. Maru, with 25 years of experience in the industry. At Toyota, Mr. Maru also leads the legal, secretarial, IT, and corporate planning functions. We also have Mr. Srinivasa Rao, who is the CFO for Rain Industries on the panel. Mr. Srinivas has more than 30 years of experience and has been steering Rain Group since 2006. And before Rain, he has spent a fair bit of time with the big four firms like PwC and PricewaterhouseCoopers and Ernst & Young. We also have Mr. Jogeshwinder Singh, who is the Group CFO for Adani Group. Mr. Singh has 16 years of global investment banking experience. Prior to joining Adani, Mr. Singh also worked with Merrill Lynch, Macquarie Bank, and Commonwealth Bank of Australia. And we also have on the panel my colleague, Ms. Tejaswini Rajwade, who is the Vice President, Chief Financial Officer for IBM India and South Asia region. Tej is a chartered accountant with over 28 years of experience and has been driving the growth for IBM at various regions and including India. So thank you all, the panelists, once again for making time here. I think we are also going to see Mr. Kaleshwaran Arunachalam join a bit late. He's the CFO for Eicher Motors and brings a wealth of experience across the 17 years, including retail firms like Future Lifestyle, Aditya Birla Fashions, and automotive like TVS, and consumer product companies like Mondelez. So as and when he joins in, he'll also be contributing to this panel. Wow. I mean, I'm already feeling really excited to hear from all of you. On a lighter note, I was just computing, the number of years of experience we have on the panel is more than what, 250 years? So that's a lot to benefit from in the short hour to go forward. So without further ado, may I request Mr. Subramanium from Titan to really, talk about, the experience through the COVID. I know we all have our battle scars this pandemic, which nobody really planned for. So how's been the journey, and are there some learnings which you would like to take forward as you continue your growth in the business?
Sure. Thanks, Ramit. Good afternoon. So Titan, consumer discretionary business, so clearly something which is going to get impacted very badly by COVID. And yeah, there was no disappointment on that part. It was bad. April, May were absolute washouts. June is when we started picking up. See, ours is a retail business also, right? So you need consumers to come to our stores, whether it's our stores or whether it's through the trade channel, etc. So it is going to be very difficult for someone like us to actually operate on our own without consumers coming in. And the mood generally was pretty tough. So it has been a very tough period. But just to explain what we did from our side during this whole period, obviously cash was the biggest issue. I mean, we said let's focus on getting cash flows, because if revenues are not going to come, because we don't know how long the lockdown would last, we need to ensure that we have adequate cash and we don't have a problem. But importantly, it was also about ensuring that our ecosystem is also healthy. It's very, very important. It's both at the front end, which is the franchisees, and at the back end, which is the vendors. We need to ensure that all of them are also safe and are able to go through this process, this period, relatively unscathed. I mean, everybody's going to get hit, but they should not falter financially. That was our main goal. So one of the things we obviously did was we kept adequate money to ensure that people were being paid salaries, a minimum at least in the vendor area and in the front end. Those who could not have managed, we supported them. Of course, we gave them loans on top of that. So ensuring that our ecosystem at least is clearly, stable during this period and functional. And the good news is, yes, we've come through that worst period, and post June, when we started recoveries, I mean, the revenue started coming back. We are seeing that much better. But from a planning perspective, I think it was entirely about doing scenario plannings initially. I mean, we had our plans that we had to make to see what could happen, because when you started this, we had no idea how long this would last. And actually, we are even learning even now as we speak. So we did a lot of that. Cost, of course, was a major area, but fortunately, in our case, we had actually started our cost exercise as early as December last year, because it was part of our FY21 plan anyway. So we had worked on cost, and that really kicked off very, very well during this period. But how did we go through this entire period? I think this is where automation helped. Our investment in our digital transformation over the last 4 years was what actually helped us so much this time, because on every side, at the front end and the back end, every aspect, I mean, where we could automate, we were doing that. And therefore, working out of homes during this entire period was relatively easy. It was not a problem at all. I don't think anything suffered at all, whether it was from a financial control perspective or from operations support to businesses. None of them really suffered. Everything went very, very smoothly. Doing multiple plans like this, actually sitting remotely, is not an easy thing to do, but obviously today technology is there to help you. But importantly, it also helped us very much with customers. Starting June, when customers started walking in, or even before that, in April and May, there was a lot of outreach to the customers that we could do through our digital channels. So video conferencing with them was the way to go. And therefore, the idea was to crunch that time to come to stores to finally buy jewelry. So they would actually explore the entire product portfolio, almost agree on the product that they want digitally through video conferencing and other mediums that we have with the store staff directly, and then come over to the store to buy, etc. So I think a lot of technology helped during this period. It's really helped us. And it's good that we've actually back to almost normalcy in our jewelry business, which is our biggest business. So that's not a bad thing at all to be in.
No, that's amazing. That's amazing. So cash is adequate, and ensuring ecosystem remains healthy so that you can bounce back when you're ready with all the scenario planning.
One other thing I wanted to add. This is something many of you may not be able to do. We, fortunately, in jewelry can do. We sold a lot of surplus gold. We brought out the inventory because we could sell gold. We could melt and sell gold. So when we started the quarter, we were actually net debt positive. When we ended the quarter with our lower revenues, we were actually cash positive.
Wow. Okay, so that's interesting. So you really had gold to take care of you. Okay, so with that, may I, move this over to you, Mr. Pandey. Similar industries, the intensity was far stronger, and I think I heard you say that 5 years of learning was used in 5 months. So it was tough for you as well. I mean, any anecdotes from your end? How did you manage to overcome the COVID-19, and now you're ready to scale very rapidly?
Well, I'll start by saying that I wish I had liquid gold as well. but let me tell you what basically happened. I mean, you all know we were shut down for 55 days. I mean, because of the lockdown. So it was a position where we had to look at liquidity. This is a business unlike a lot of the others, which burns a lot of fixed cash, fixed expenses, and those fixed expenses are extremely structural. If you take a plane, you pretty much have it for the 6 or 8 years that you've taken it. You just cannot end a lease midway and say, listen, take your plane away. That's breaking covenants from an international legal convention, and you cannot absolutely do that. And once you do that, I mean, it's a slippery slope with the external investor market. So from that perspective, liquidity was extremely key. We did variety of models, variety of iterations. We took the board through where we were. Fortunately for us, we started at a reasonable liquidity position as compared to where the industry was. So we were that way in good shape. But just because of size and scale, 27,000 employees, 275 planes, 50% of the aviation market in India, our challenge was, also extremely large as compared to anybody else. So that fortunately worked out reasonably well for us in terms of putting plans in place, talking through what are we going to do for the future, where is it that we want to focus on, and what do we want to do. But beyond liquidity, there were three large goals that we wanted to come out of the pandemic. We wanted to use the pandemic as an opportunity from a customer perspective, from our own internal perspective, and more importantly, from an employee perspective. So three things that we focused on. We said, as we come out of the pandemic, the first thing that we have to give to our customers is safety and security. It really doesn't matter. No one's going to take a flight if they're not convinced that the plane that they go in is safe and secure. So there was tremendous amount of investment made in terms of understanding and making the customers understand what is it like flying in an aircraft. So for example, we've got these HEPA filters in which air flows in an aircraft, air flows up to down and then goes through a HEPA filter and recirculates every 2 minutes. So at any given point in time, you're breathing fresh air in an aircraft. But how do you get it across to the people? So we used all our digital mediums from advertising perspective. We called it the lean, clean flying machine. And just anecdotally, we were always decent from an NPS perspective. We had an NPS of 24, and we used to strive to be 50. We said in 3 years we want to be the world's highest NPS on a commercial airline across the world. And when we actually opened up, our NPS today is at 54. And we attribute that to the fact that we've spent a lot of time with the customers. We spent a lot of time in the airport. We spent a lot of time with DGCA, with CISF, with the private airports across the country to work through what does it mean from a safety and security perspective from a customer. And that's resonating well from our customers. Our market share is up from 48 to 60%, and from pre-pandemic, and we feel very good about what we've been able to achieve. Obviously on a very, very low base. I mean, this is early days, it's low base, and one will have to see how that plays out into the future. But early signs are extremely encouraging. The second was employee engagement. We are very clear this is a customer service business. This is not a business where a customer just ends up going from one place to the other. You cannot have a grumpy check-in agent, a staff at the airport, or a crew at the airport. So we had to go through a major resize of our organization just because it was a structural change in the aviation industry for the next 2 to 3 years. It wasn't as if lockdown would open and we'd have 100% capacity flying. So we understood that. So we had to take some very, very tough decisions on employees, but we took them extremely compassionately in terms of 2 or 3 industry leading things we did. Apart from giving them the right exit package and taking care of their medical and all that we did, we also put a 6E directory in place, which said that whenever we go to hire, we'll first look at you because you are our trusted lieutenants. It's just the time is bad for us, and we are in a situation where we just cannot. We have to manage the company and manage the employees both together. And just for the company's survival, it was important for us to make those structural shifts. We also measured employee engagement as an NPS, and that is also at the all-time highest. So this is a world where people's salaries are cut up to 35%. This is a world where people have lost their jobs, but everybody looks around and says, listen, I'm in a better place in Indigo than I would be anywhere else. So again, very happy with the way our employees feel about what the company has been able to do. The third thing is, at the end of the day, this business, unlike others, is a lot of the other businesses are similar, but for us, cost leadership is extremely important. In this low-cost carrier business, if we do not have cost leadership, then it's very, very difficult to survive in this environment where revenue is never in your control. Revenue is whatever the customer will offer you. Revenue is whatever you end up getting, but cost becomes extremely important. So we measure what is called a cost per available seat kilometer. So one of the goals that we set out was that as we come out of the pandemic, we should have a structural lower cost equation. it cannot be a situation in which we, just go through this and don't do something that is dramatically different, from a cost perspective. So, I'm conscious of time for other people as well. I'll cover the cost points that I'm mentioning in the other questions, but those are the three things we came out with. Liquidity was a top 6, and also equally important was how do we make sure customers feel comfortable when they come back, and an engaged workforce as we start business. With that, I'll hand back to you.
Yeah, well, that's amazing. Thank you very much, Mr. Pandey, for that. I think cash is king, and you really made the most of it very clearly. So thank you very much for those valuable comments. May I just turn over to a completely different industry, and Mr. Parekh, healthcare has had its own challenges, but clearly you are in the other side, if I may, where you're seeing a huge demand and a surge needed in your business. So any comments from your end in terms of how tough COVID-19 was, and what are the key learnings which you are going to take forward from there?
Thank you, Ramit. So as you rightly mentioned, pharma was relatively less affected due to pandemic compared to many other industries. We being essential service industry were allowed to operate even during lockdown period. So we had our plants running. While initially we faced some issue in terms of absenteeism of workers, but many measures were taken in terms of giving them comfort. Various safety measures, sanitization measures were taken, which actually help in cultivating that the kind of confidence and trust in the employer. And we had good success stories where some of the employees were staying in the plant for almost a month or so without going to home. People from one location to another location just for delivery of the goods. One person went on a motorcycle for 65 kilometers just to deliver a syringe at another place. So very good success stories of heroes of pandemic we celebrated and recognized. Three important activities we had said just when the lockdown started in end of March. One was the conservation of cash, which other members also mentioned. The second was control of cost, and third was continuity of business. All three we worked very. In fact, the liquidity management office was immediately established. Our chief strategy officer, myself, and my other finance and operating colleagues, and priority of payments were decided. Good use of technology and data were made in terms of identifying priority payments, MSME payments, single source supplier payment, business continuity payments. Across the globe, we operate, in US, Brazil, Mexico, Philippines, several other countries, South Africa, France, Spain. So we, on a daily basis, collected the information about all the payments, cash balance, and at a very good control. Authority matrix was also changed to decide, certain discretionary payments. Complete revisit of all the cost, in a way, saying with zero-based mindset. How it helped is in April to June quarter 2020, our EBITDA margin was 22.4%, which was 18.8% in the same quarter last year. So that was thanks to the very good cost control. When I talk of liquidity, at the end of March 2020, our cash and bank balance was 1,250 crores. Our idea was not to allow it to go down from that level, which covers my almost 6 months salary at a console level globally. So we said this balance would never go down. Okay, and then the way it acted is by my first week's collection will be utilized for second week's payments and so on. Okay, this was measured on a daily basis and is even measured as of now on a daily basis. Thanks to that tighter control managed through processes and technology, our cash and bank balance on 1,250 crores in March end reached 2,450 crores in June end. Okay, addition of 1,200 crores to that, with a very good working capital control also. So we had a 3 months rolling plan, in terms of revenues, cost, profits, and cash flow, with a sensitivity analysis, running simulation, running sensitivity about what percentage will be true based on this, and working on sensitivity, managing it week to week basis, then month to month basis. I think we've done a reasonably good job in that respect. What is helped in learning is that costs are certain, profits are not. And therefore, it's very important to have a good handle on cost and revisit all the cost with a zero-based mindset. The second is in terms of use of technology. Working from home has, I think, taught us that how technology is important to us. Fortunately, we had, when we shifted to a new office just before Diwali, we have given everybody laptops only, no desktops. So that helped in terms of working from home with the use of technology. Our going for Office 360 also helped us. In our group, we are also utilizing BIBO tools. One group company has already gone for S4HANA. For main company, we are going for this. So a lot of many things happening. We believe that digital, tools and technology would certainly help, in Indian pharma and branded formulation business. A lot of many things have been done and being done in that respect.
Sure. Thank you very much, Mr. Parekh. That's extremely useful. And cash, you clearly the focus on cost and cash really helped. And I think there are a lot of heroes which we were able to find in this entire journey. Can I just I'm conscious of the fact that.
Just one point, all of us, I think, learned in our studies in terms of three motives of holding cash: as a transaction motive, precautionary motive, and speculative motive. I think for the first time, possibly, most finance people have recognized the importance of precautionary motive in their life.
Yeah, no, I couldn't agree more with that. I'm also so thank you very much for that comment. I'll now move before I go to Mr. Swaminathan. I wanted to just go to Mr. Maru. I know that he has a hard stop and he may want to be leaving soon. So in the automotive industry, Mr. Maru, we don't have the business has been under stress for a while. So while nobody would have planned for a pandemic, that must have been an added layer of complexity on your business. So how did you see this? I mean, there was a slowdown anyway coming in, and your thoughts on that. And I did read about, even if the market was there were supply chain challenges which you had at the back end. So when demand was anyway not there, and then when demand was coming back, there were some issues which I keep reading. So your thoughts on COVID-19 and learning from there.
Thanks, Ramit. And before I start, maybe if I can privately learn from Subbu, who bought your gold so that we can go and sell some more cars to them? I think that will be one great.
We actually sold it to the MCX itself. We had taken some option. We had taken futures on because we hedge our gold. Instead of settling in cash, we did it by physical delivery. That was the best thing we could do.
We need such breakthrough ideas, maybe. So coming back, like you rightly mentioned, I think the auto industry was reeling under one of the worst crises even before the COVID hit us. It started way back in 19 and was getting more and more entrenched. And then COVID happened. That was on the industry side. And as Toyota in India, we have created capacity of about 3 lakh cars per annum, employing about 8,000 people. We have 500 dealers, and we've got a huge supply chain to look at. And against a capacity of 3 lakh, even during a normal time, we were doing a lakh and 20. And then, of course, pandemic hit. So it was chaos, to say the least. I won't repeat the fact that cash, of course, that's been pretty much pretty consistent all across. And managing cash has been fundamental. But for us, it was very critical to ensure that even before we take care of ourselves, ensuring the safety and sustainability of the supply chain was primordial. So keeping the dealer operations alive, for some time we could not open showrooms. Once you open showrooms, people would not come. I mean, the sales staff would not come. How to get the customers to the showroom was one end of the problem, and still keep them or cash healthy so that they can manage on their own, because nobody would loan out money to a dealership operation. Similarly, on the supply side, same horror stories. And how can you inject liquidity there and keep them afloat? While you do all this, you also have to be very mindful of the employees whose safety, whose health is very important. And we're talking about a unionized. So managing that was very critical. I think communication plays a very important part here, as IT, as finance. If you're able to explain this kind of issues in a very transparent, open way, I think people understand. So communication played a big role. some of the lessons that we've kind of picked up during this time. Now, Toyota tends to have a very strong legacy, and as a result, we have a very traditional style of business. But this crisis taught us primarily that fixed costs are not fixed and variable costs don't vary. So when chips are down, if you expect it by shutting down the plant, all variable costs drop, they don't. Similarly, fixed costs, we think, which are sticky. Of course, I don't talk about the investments already made, but the commitments that you make are up for talk. And I'm not talking short-term cost reduction here. There is a shift in trajectory in terms of what you recognize. So this is one big learning, and recognizing that cost structures have never ever been so very important than what we have seen in the last few times. The second thing that we realized was, and this was a lesson for us, everybody talks about work from home and a new normal. But if we look at, we could see in sharp focus where actually we were adding value and where we were not. So a whole lot of processes which are nice, which are fluffy, operations could still go on, consumers could still be kept happy without any of these processes. So I think one hard lesson we have learned is how to kind of take a sustainable structural view in terms of where we add value and how can we move away from areas which are nice to have but don't essentially kind of contribute. And this is not easy for a legacy manufacturer like us. Also important is the openness to new ideas. I think in the last 2-3 months, the kind of activities we have done, we've never really done that in the last 15 to 20 years. For example, my entire stock taking was done remotely. Audits were remote. As we talk, we are implementing the SAP S4HANA, a mammoth project with about 175 people, all working from home, and still the project is on time. The supply chains have been digitized, mainly on the dealer operations within 2 months, because we are an industry where we want customers to actually come to our showrooms. From that viewpoint, to say stay where you are and we'll give you a complete digital experience, never really easy. Using robotics, automation, in a company where we believe by touching things with our hand and feeling has been, to say, a huge mindset change. So all in all, very, very important lessons learned. The importance of respecting legacy but not shying away from doing things which are bold, being sensitive to human aspects, because removing people is not an answer that will not change things, but how can you still stay afloat and manage the emotive side of business is something very important. How to install a sense of ROI, not just in finance and IT, but across the companies, so that they realize that a crisis like this, it's about surviving together. And once people realize that, I think it becomes much more easy to move towards a bigger, more strategic and sustainable objective. So this has been our journey, and maybe if we have time during questions, we can touch upon the specific themes and activities that we could do. One quick input is that because we are a conglomerate across the globe, we were lucky enough to have 6-7 companies facing a similar situation. And the collective learning that we could leverage out of the other companies and how they went about gave us several eye-opening lessons. All in all, it's been one hell of a learning. I think it's not stopped, it's just beginning. And for auto industry, I think it's going to be at least a year and a half more of pain, but we are confident that what we've learned, we should be able to come through. Over to you. Thank you.
Thank you very much, Mr. Maru. I mean, I really would use this with your permission, how to take sustainable, structural view on where you add value. I mean, that's amazing. I think that's very visionary in its own way. May I come back to you, Mr. Ramesh Swaminathan, in terms of how's it been for you, and more importantly, I think we have heard about, that cash is critical, which I think, a lot of people have been able to manage in their own way with some success, some failure. But going forward, what are the key learnings which you are likely to take forward? Because I keep hearing people say that, COVID suddenly taught us something new, which never we even thought about, right, in general. So any thoughts on that from your end? Mr. Swaminathan, I think you're on mute. If you could unmute yourself.
Yeah, so am I audible now?
Yes, you are. Thank you very much.
As Cisco was saying, the pharma industry has not been impacted as much as being termed as an essential industry, we were indeed different in the way the government also saw it. What Nitin was saying, it's not as though it's been bereft of any impact. The prescriptions were actually down in various. I see that the prescriptions are down in America, Mexico, Philippines, and a host of other countries that you are operating in. In India, in particular, in fact, the acute by a good 20%. There was some reprieve when it came to, in fact, the more. Not what I want to speak about. Obviously, we did what it takes to kind of keep the supply chain going, despite the challenges that there were in terms of at the factory level, and of course in terms of raw material supplies, and of course the geopolitical situation. Supplies from China were impacted and the like. When it came back again, we were able to keep the operations going. But we were able to close our books. We were able to. General meet. Obviously, things were in it as business as usual. But at the front end of business, things were very different. When it comes to, in fact, and so on, they were not really seeing patients in their clinics and the like. So even diagnostic centers are not really open. So to impacted the prescription because there are not too many patients who are not suffering from COVID who are calling on doctors, so to speak. And that's the first point that I've. Pharma kind of survived by calling on doctors, promoting our products and the like, and that actually took a very different turn because it was a situation where doctors are not meeting with, in fact, the representatives. So it actually called for different ways of actually promoting products to. COVID situation, digitization had actually impacted this industry, and you had telemedicines and the like. The platforms, were there. And became the model, so to speak. But at the same time, we also looked at different ways of promoting to the doctors. Our interaction with doctors by used to go to the doctors and detail out various products. So the manner in which you detailed out products, we took a virtual route. By you really kind of meet with the doctors and promote your products. The second was in terms of the doctor. The day. So, prior to this, potentially you would have had physical meetings and potentially conferences and the like. It took a very different turn. And actually it sets us thinking that potentially it's going to be the new normal. So I would think that these are going to be new ways of promoting. And this paradigm relating to interaction with doctors is potentially going to change across the globe. And not merely in India, across the globe. The way we saw our business itself, and I'm now speaking wearing the CFO hat. He protects value. The first thing, that's a custodial function that we all indulge in, and a lot of my colleagues spoke about that priority. And so, and as with everything else, you do a lot of business, continuity planning, contingency planning, and the like. The second is even before, and it's actually a continuous activity. It's all about liberating value, simplification of processes. The manner, so much of emphasis on digitization, it actually gives us a lot of opportunities to kind of simplify the process itself. So you rethought process, look at great opportunity to relook at a lot of these processes, and it's a continuing thing. And third is essentially that came the situation. You always had this focus on return on investment and the like, but I think there's a greater situation where you so you draw up scenarios, how things are going to change, because this is actually a real VUCA world. You find business paradigms actually and it calls us where you actually say, if this were to be the situation, how would your reaction, how is it that you're going to work under realize value for you. Fourth, these are trying times, and it's confusing times for people also. it's going, not merely with, in fact, your employees or stakeholders like the investors and the like. And how is the company going to react to that? I would also like to say that this is a great, the focus was there even before, the COVID situation. But digitization has actually taken a very different turn at this stage. A lot of, the core data system, so to speak, a lot of data being captured in your SAP, even at the plant level, you had a lot of PLCs through DAX systems and the like. And that actually goes into the core of, a lot of static information, which helps you in relation. What I think the decision at this stage is actually doing is taking it beyond, in fact, just the core. You're looking at, in fact, for example, if you really a very different in terms of, for example, predictive analytics. If we want to go down the path of using AI, ML for increasing productivity at the plant level, or for that matter, at the talking about capturing different kind of data. The plant level, for example, you might decide that your repairs and maintenance bill is on the higher side, and you might actually the data that makes you place sensors across, in fact, the machines, the equipment that you work, and decide on the algorithm through which you will be receiving this information. We are using analysis, a lot of data to look at a lot of future-related, actions, in terms of predictive analytics and potentially moving on to, the change much more, is much more rapid today, and the need for it, it's a bit like data is always available. It's a bit, lamppost, use data for potentially supporting, uses use a lamppost for supporting himself. But that's not the way one should see it. And that, I think, is happening through this the use of a lot of this data for predictive analytics, using and get it a role in helping to take decisions. And that, I think, is going to be the paradigm going forward. And that, I think, in a general sense, means the CFOs are going to act and respond in the future.
So thank you very much, Mr. Swaminathan. That's quite amazing. Use of technology, and you're anticipating things to get more intense as we go forward. Let me just turn this over to Tej now, because I think everybody has been talking about technology, and Tej, you at the helm of running a technology firm in India. I mean, everybody would expect you to, to have steered this far better in general. We can't really follow anybody else. Any comments from your end, Tej?
So thanks, Ramit. I'd like to focus it primarily just to address what everyone is saying from a business perspective. As you said, we were in a fortunate sector. No one needed technology more than they did in the pandemic. And we were so digitally ready for our clients. And that gave us tremendous advantage to be the essential services for our clients, because, as you said, we were in the airline industry, in retail, in all top customers are Fortune 50. So we were really there. The second, from a people perspective with crisis management teams, this was critical for us because, as you know, we started this journey very early to become truly globally a global enterprise. So in that sense, we had the early movers advantage. And speaking just for finance, we started our transformation journey in the mid-1990s, where we had the vision to take advantage of our global presence, our integrated infrastructure, and I mean integrated truly with placing people, talent, machinery where we think it works best for us, have robust transition processes, so if one fails, another picks up with zero lag time, and tools that are really built to have a globally integrated management system. To give an example, we have centers of excellence all over the world, which was a very detailed exercise a decade ago. And this was tested with the audits that are, and financial statutory reporting has to be done. We have, I think, around 3 accountants in India, and our entire force or accounting center is in KL, in Kuala Lumpur. We were able to seamlessly work with Pricewaterhouse and RG and price to make sure that we made our best time of filing our audit results, audited financials in 2020. This speaks to our readiness on how we have been able to leverage agile practices and cognitive technologies to really build a faster, leaner, and more efficient and integrated processes. And I would say in the last 10 years, we have been able to save 8 billion because of this constant iterative process, which is the agile methodology, to make sure that we are ready to build a resilient consumption-based finance model. So to answer your question, Ramit, we were really tested to our limits from every perspective, from manufacturing to cash collection in our model, which we have in the pandemic. And we were able to move 99% of our workloads remotely within 2 weeks. And we saw zero degradation in our services during the month of March. And after that, we have been like at 100%. So I'm proud of IPL, and I think it was a commendable achievement.
So it's quite amazing. I mean, so what I'm understanding is the hard work over the last decade put us in good stead to be able to, of course, nobody planned for it, but we came out shining in that way. So thank you very much, Tej, for that comments. May I move to Mr. Srinivasa Rao? An organization which again is I think was classified as an essential services business. And so how what your view on learnings from COVID-19 and what you would like to continue going forward as well?
Thank you, Ramit, and thank you, ASSOCHAM, for giving me this opportunity to participate. We are a commodity, we are a B2B player between the refinery value chain and metals. Around 35 to 40% of our group revenue comes from the aluminum industry. Because whatever we discussed, like the airlines industry as well as the automobile industry is going through the turbulence and contraction in the demand, there is expected fall in the demand for our product also. And because of that, few things we started doing is in the last 3 to 4 years, we have been investing on capacity expansions both in India as well as Europe. And because of the expected fall in the demand over the next 1 or 2 years, we are slowing down our expansions. We are focusing on capital allocation. And one important thing we are doing is we are reallocating the capital, reducing the further investments and using it to reduce the debt. That is the one major thing we started implementing in the pandemic situation. Apart from the pandemic, we also have we all see the substantial fall in the commodity prices, especially crude and other petroleum products. So because of our products are also indexed to the crude prices, in the last several years, we have been accumulating or increasing our investment in the working capital because the cost of funds is very negligible. The cost of borrowing is about 3 to 4% because 80% of the operations are outside India and the borrowing cost is very less. So a lot of stocks have been maintained. In the situation today, because of the very volatile markets, the commodity prices are fluctuating very widely. And today the focus is not accumulating or maintaining more stocks, or reduce the gap between the buying time and the selling time, or the prices at which you contract your purchases and the prices at which you sell your products. So as long as you are able to reduce that gap, your margins will be well protected, because in a commodity like industry where your operating margins are about 15 to 20%, where a 5%, 10% decline you are seeing in a quarter or a month, your margins will be at high risk. So what we started doing it is we are focusing on our purchase decisions on a global basis. Every week we look at our order book and where to procure the material and how we can reduce the time gap between the procurement and the sale. That is the strategy we are implementing, and we expect that because of that our operating margins will be maintained above 16% to 20% in the coming quarters. Apart from that, like some of the panelists have mentioned, we are also taking this opportunity to standardize our processes. We are preparing ourselves for a Sarbanes-Oxley compliant and we are also our operations in Europe and North America or India are different types of workflow systems are being used, where duplication of efforts, and we are not able to use the central pool for that. So what we are trying to do is we are standardizing all the processes between India, Europe, and North America. So we will reduce the duplication of the software licenses and other things we can reduce. And also today the work is allocated by legal entity, which is also causing some difficulties. And what we need to do is by having a standard process across all the regions, it will be the process wise or function wise. Like a AP, you will have a single set of team, whether the AP team works for Europe or India or North America, we don't really care. They are geared up to use all types of tools that are there within the AP. So from a legal entity perspective of allocation of work, so it is moving towards functional specialization and standardization of the process. We expect some savings should come in the headcount as well as the operating costs in that model actually. That's all from my side. Thank you.
That's quite amazing. I mean, what I took away, Mr. Rao, was reducing the cycle time of decision making. You're being slightly more proactive, taking decisions far quickly, so that you're able to save on your margins, and looking at structural changes within your company. You're moving away from a legal organization based structure, more horizontal, which is more functional orientation, which I think, if I got it right, that's what I think Tej was alluding to, which is a journey which we started some time back as IBM. So I mean, it's amazing stories which are there. Can I go over to Mr. Singh? Your comments. I mean, Adani has been really growing very fast during this pandemic crisis, and it's all about the great leadership which is there. So, any thoughts on how you see this space and your learnings from COVID-19, which are going to take forward?
Thank you so much. Since a lot of our guests and fellow panelists have talked about liquidity, I won't go into that. We generally do plan for 12-month liquidity independent of any events. Although specifically we do plan an event risk, but nobody planned for a COVID-like situation. So generally speaking, across all our listed verticals, we have what we call a 364-day liquidity plan, independent of any events. That's number one. Number two, part for us is that a lot of our businesses are basically classified as essential services. So power producing, distribution, transmission companies, and port services. So we dealt with a very different challenge, which is that we had to keep operating during this time. And a lot of our businesses, because they are very large assets spread across, at the last count, about 322 locations in the country, we had to manage staff, occupational health and safety issue. So overnight, the rules were changing as to how the staff work, how they pay, how much space, and what issues, medical provisions. And at the start, not very many people were clear it was a medical issue, and now it's a full-fledged socio-economic and political issue, this COVID crisis. So we are so for us, the initial key aspect was to make sure that all the essential services remain operating, and that was important. It was important for hospitals. It was important for IT services. It was important for households. And so our objective was to make sure that wherever we are, that piped gas, electricity, these services are available to people, and they didn't go down. And secondly, naturally, because this heavy maintenance requirement during this period, we also had to ensure that we manage the staff issue of working through an environment when the occupational health and safety standards were altering. So that was a learning, and some of that I think is more long term, and we will include that within our framework of working. Our various leadership teams across our verticals will do that. It will remain an essential part going forward. The other aspect from technology for us was that a lot of our businesses are also almost practically digitized. So for example, we run our solar power plants practically from a computer screen. They automatically issue maintenance orders, etc. So it's highly integrated artificial intelligence, although within artificial intelligence, the narrow type, not the general artificial intelligence. So the narrow artificial intelligence programs primarily based on data analytics. So that aspect, to keep that going, we found that enhancing that even more is going to be very useful going forward, especially when you have to maintain crews from remote areas. And so integrating crew operations and management to wherever we can in a digital framework is a big step for us, and we'll continue to do that. And I think it will only accelerate for us. From financing aspect, given that we are in essential services, we continue to naturally spend during this time. We can't stop because that would mean that basic essential services standards can drop. So a lot of our capital expenditure program continues. So it becomes a challenge to continue to finance them. So our this year also our capital expenditure program will be in the order of about give or take about $5 billion. So about 35,000 crore this year. So it's going to compress into about 9 months, and from normal 12 months, because first 2.5 months got written off. So that's a challenge for our EPC part of our business, for our development teams. Overall, though, we are more from a strategic aspect and longer term aspect. It's very important that somehow the small to medium enterprises are sustained during this period. I think it's very, very important. Big industry, one way or another, we will figure a way to manage through this. But I think for micro, small, and medium enterprise, I think it's very important that those are sustained, because one, they employ the most number of people, and they form the most valuable cohort in India. That is the Indian consumer. And Indian FMCG companies, Indian retail banks, any consumer platform in India is very highly valued, and they are valued because of Indian consumer. And I think during this period, one thing that has to be done is for us, that we have about 20,000 vendors that we deal with across our various sites. So the idea was to ensure that they can maintain their business, small businesses, they can maintain their micro businesses, they can continue to provide the services, and that we continue to pay them and to keep them employed gainfully during this period. So that has been big learning, and it has actually helped us cement our relationship with our small vendors. That program also we will now digitize. We'll create a vendor marketplace, and then that is now going on. So for us, many learnings. The primary one being that a revised occupational health safety protocols for a very large number of people who have to work essentially 24/7. Thank you.
Thank you very much, Mr. Singh, for those comments. Clearly, the scale and magnitude of challenges and keeping the ecosystem players completely aligned with you has been amazing. Just continuing with you, Mr. Singh, with your permission, I really wanted to delve further into this. As companies now, emerge from pandemic, and it's anybody's guess whether it's 6 months down or quarter down or a year and a half down. But there are, the role of the CFO is fundamentally going to change, right? I mean, it's already evolving from being a bookkeeper or a postman, if you would, to a business partner. And going forward, it will become even more critical as companies navigate, the turbulent times going forward. And your specific comments of continuing to invest into making your finance operations more resilient and consumption based, and any pointers from your experiences, and anything for the audience in general which you think you'll share your thoughts on.
I think when a disruption event like this happens, there are naturally many learnings that come out of this. One basic fundamental that we should understand, and we should put all of this in context. If we take written history, we have been a continuous civilization for 5,000 years. Many people like me will come and go. And from a civilizational perspective, this event is nothing. It is tragic to the point of view of the families it has affected. And I think what we need to make sure is that we do not get unnecessarily overly concerned with an event that on a scale of civilizational life, it will be nothing. Nobody will be thinking of this. Nobody will be worried about this. This will become one of those events when in late 60s, 1967, 68 to be precise, Woodstock was going on and the flu was going on. And well over 4 million people died that year. And this COVID is 1 million. And I don't think that any one of us, some of us were born, I was born after that event, but I can only read from history, but those of us who are, do any one of us recall anything about that event? 4 million dead in a flu. So I think we should, first thing we should do is not be afraid. We have to be careful, but not be afraid. So there's one lesson out of this so-called pandemic. The second thing is, which is practical aspect of what the industry and people from point of view of people in leadership positions can do. 2008 we had financial crisis, 2000 we had tech crisis, 1998 we had Asian financial crisis. So there are many events that we have gone through. I think in each event, one thing that has been consistent across all these events is a more holistic view to risk management. And at each stage, we have to figure a way to transition to a more responsible way of managing our risk, and not just financial risk, operational risk, or employment. It's a much wider stakeholder. We have a much wider ecosystem. There's a much more interlinked logistic chains, supply chains. They are much more interlinked issue of reporting. Some of us report in multiple jurisdictions. We have global capital market issues outstanding, so we report as per US standards in certain aspects of our businesses. So all of that, I think more we can standardize, more we can benefit from, more we can take the advantage of digitization, better standards we can put, better governance we can put around risk frameworks. Is the key message that if there is a message in all of this, and that in summary, I would simply say, do not be afraid, Ramit. This is going to go. We in India at least, we are very resilient. We have 5,000-year-old recorded population, much longer than that in terms of if we go by oral history. We will get over this. We need to just ensure that the fundamentals of governance and risk become a bit more robust, and that we as a nation, as businesses, become much more nimble to deal with these things.
So thank you very much for your comments, Mr. Singh. So, while it's good to keep that millennial civilization view in perspective, but sometimes the markets and the analysts do not have that kind of patience, and they react in a different manner. So I guess that's the balancing times which we need to go. But great comments. Thank you very much, Mr. Singh. May I go back to Mr. Rao about what are the fundamental changes which you're now beginning to bring about in your finance organization to make it more resilient and a consumption-based organization. Mr. Rao, in case you're there, would you like to comment on that? Okay, I think Mr. Rao may have. Okay, you're there. Thank you.
Hi, Ramit. Actually, we are a B2B type of industry, and we don't have much to do with the consumption-driven resilient finance function. But irrespective of that, what we are planning to do is, like I mentioned in my earlier comments, standardization is one, and we are also bringing a lot of automation into the process. Hitherto, the budgets or the business plans are prepared in each country separately, and they take a lot of time to make the changes or revise the budgets because the orders and the prices both will be fluctuating very widely in our business. And for that, we are bringing some automation, like some of the SAP tools like BPC. We are using BPC only for the purpose of consolidation of historical financials. We are also planning to implement the business planning part of the BPC, where the entire budgeting and forecasting process can be automated. We initiated that step. So because of that, the finance and IT will be more involved in preparing the business forecast, and maybe on a monthly basis they will be revising it so that it will be more informative decisions can be taken by the board and the management. That is one change we are bringing in the finance function.
Yeah, and not to talk about the structural change, which I think you're beginning about, which will help you consolidate some of the functions in general. So that I think would be additional capacity getting created. May I come back to you, Tej, because it was, of course, from the same organization. It's good to hear about the journeys which you made. How do you see things going forward now? I mean, you've already. Are we expediting investments further in technology to continue to make the finance operations more resilient and more intelligent? And any comments from your standpoint, Rachel?
So Ramit, we stay focused more than ever to continue to make the investments to be not only more resilient, but we strongly believe the future of finance is consumption-based organization. Explain that everyone to the McKinsey report, which was published in March 20, which agile functions are in 3 pillars, yeah? Making sure customers are happy, making sure employees are happy, and making sure that our operational performance minimizes spend and maximizes outcomes. I think historically we have been so focused on output instead of outcome that I think we need to make a pivot to really seeing how the financial organization is now moving with speed and flexibility to meet the organizational needs. And why I say that is that if we have to look at adding value and being trusted business advisors, we have to relook at 5 aspects in my mind of the way we run finance: our strategy, our structure, our people, our processes, and last but not the least, our technology. Because I believe that with AI and machine learning, and we have proven this with very, very deep statistics and analytics, that we can make everything need-based, that you can pull from a system whatever you need. So in IBM, what we have done is we have launched the Enterprise Performance Management, which is the EPM tool, which is the single version of the truth. So it took us significant amount of time to build a data lake for all our, and what you said to your point of intelligent workflows, because we know and procurement and pipeline management as different, but we have started looking at processes horizontally. So let's take the example of quote to cash. It may start by a seller giving a quote, but that transaction ends when I get cash. So instead of looking at it in silos, we look at it as a very detailed matrix organization, if that makes sense, where every data point is available in that single data lake. And therefore, you can pull whatever you need, and I'm sure you can show it one day, Ramit, is that you can pull whatever dashboard you want. You can look at it by client, you can look at it by industry. So when we had the pandemic, we started running all our reports by industry, because the airline, the distribution, the manufacturing were the worst impacted, and we wanted to see how we could support our clients. And then there were other industries which were actually doing better than they would have otherwise done, such as digital industries, where we were providing the platform where we could get better prices because of their booth. So what the message I want to say is that we have to stop looking at finance, in my view, as a number crunching machine or just providing the treasury tax accounting function, but looking at it as a platform which is looking end-to-end multidisciplinary business-oriented outcomes, because we want to reduce the number of handouts and iterations of everything going in circles before it closes. And if you have a common platform and you have people who are able to see and share data, it's a mirror. It will incrementally improve efficiencies in my mind and therefore make us resilient. And also we are able to reduce the allocation of the finance cost center, because at the end of the day, we don't generate any. Our organization. From a cultural perspective, we are also trying to change the mindset of our finance employees. That we are not finance, we are finance and operations, because we have to make an impact to the bottom line. And this is a key change for us, that we have started encouraging people to make mistakes, fail fast, but learn and course correct with equal agility. And this therefore empowers them to adapt, improvise. And because everything is automated, people can, like in this Webex, give real-time feedback in chat. And therefore we are able to make sure we are really becoming resilient and consumption-based. And what I mean by consumption-based is we will charge only for what organization uses and needs and start weeding out all the rest.
Oh, that's quite inspiring, Tej. Thank you very much for those comments. The end-to-end multidisciplinary business outcome based intelligent workflow. I think that's quite
Tough a mouthful.
Yeah, no, I was trying my best to replay that. I'm sure I did a bad job of it, but thank you so much for that. Let me just take this to you, Aditya, because I think you also mentioned something similar about focus on customers, focused on employees, and get your when you reemerge from the pandemic, you have a very different cost structure in a way. What are the specifics, actions which you're continuing to do to look at a resilient finance organization? And any thoughts on that, if you were to concur with that?
I mean, we are an organization. Thanks, Ramit. We are an organization that has grown at about 35% in years. So we've just kept on chugging along at a very fast pace. And you can imagine in that kind of organization, unless you put the digital tools very early into the game, you can start falling behind very quickly. So one of our biggest goals in finance is to, this is a headset change as well. It's difficult to overnight transform finance functions. I mean, we've tried this in our careers before. It's a little bit of a journey. I think the first thing we need to do is to drive two things. One, there has to be the life of a finance employee that has to improve. You will not get a buy-in because if you're going at 35% a year and work's going on at breakneck speed, if you tell them I've got digitization on top of it, it seems like a task. So I think it says, okay, now I'm doing 12 hours of work, now I've got another 2 hours of work. So I think it's very important to make this a way of working, a way of life. So there's a lot of attention right now going in building a shared need or a common need in terms of what really do we need to do. Because we're a $5 billion company today. We can't be a $10 billion company, doing the same thing that we're doing today. So in some ways, we've got a golden opportunity over here to kind of transform the way we do work, transform the way we look at all our processes, and integrate them with our front-end operations. So, there is a lot of work right now going on in terms of working alongside employees to build that shared vision. I'm extremely confident we'll be able to do that because we've done that in the past as well. But if this groundswell doesn't come right from the beginning, right from the employees, it becomes very difficult to do this as a top-down approach. So what we want to achieve is very clear. And if that ends up leading to variabilization of costs or what you call, consumption-based, finance organization, absolutely. But I think what we are really working for right now is making sure that there is a way of doing work which improves the lives of a finance employee, but more importantly, drives productivity for the organization and makes the organization agile itself. So those are the larger goals that we're going with. And we kind of very confident of getting there, but it'll be a little bit of a journey for us, than some other organizations. I heard, Subu mentioned earlier that, this has been, they've been working on it for 4 years. This is something that we want to achieve and become a better company from a process discipline standpoint. So those are the goals that we focused on.
Thank you very much, Mr. Pandey, on that. On that same point, Mr. Subramaniam, can I come back to you and we really talk about? It was inspiring to hear your investments in technology over the last 4 years helped you do better in this situation. So, are there specific actions which you are going to continue to do? What are the big themes which you're trying to solve as in your finance organization? Any thoughts on that? And I want to play one of the audience question back to you with your permission. The question is from Mr. Valyapan from Chennai. Valyapan, he's saying that having experienced the challenges of COVID-19, can you suggest the proportion between cash to be held for transactionary, precautionary, and speculative motives? So, would you like to comment on that? I mean, since you have a pot of gold, I thought I'll ask you to answer that. I think you're speaking on mute.
I think it entirely depends on the organization and your cash position, your outlook for your business, the need for investment in your business, and so on and so forth. So to each his own, frankly. I don't think there is a universal truth to everything. The way we run our business is, we are lucky we have a business model which is actually very asset light. You may think we have a lot of gold, but I have it backed by gold on lease, okay, which is almost entirely there. So I have, therefore, a business model which runs actually very thin on working capital. I can run it because I have a lot of franchisees who are doing a lot of the heavy lifting on the selling side for us, okay. So I think, therefore, each business depends. Now, if I were to go with infrastructure companies, I mean, you will need cash capital right up front, right? You need to put in that money right up front. So I think our business models are different. Coming back to the other point on our investments, yes, I think that call that we took 3-4 years back, it was a call actually just the CEO, MD, and I took at that point in time. And this was whether our businesses wanted it or not. We said we need to invest in digital transformation. And we came in more from a business perspective than from a finance organization perspective. Okay, it was very much on that. And therefore, even now I tease my guys, I gave you all the money, but I'm not getting anything back for myself as a finance function. But very honestly, it's fine. It's fine because we can manage. I think what is important is to be able to connect to the consumer better. And therefore, we are seeing so much of traction because of that today. I think that's very good. And as far as finance itself is concerned, how do we make all our costs as variable as possible? I think everybody's talked about that. And this is one thing I keep telling my organization, that you guys see, we have to lead on cost. While the entire cost running program that we are running is obviously run by the finance team, at least led by the finance team. It's focusing entirely on sustainable cost, not just what I can save during this pandemic period, etc., etc. So it's about actually gaining. And so I keep telling them that, we need to set the example more than anybody else. So, for example, keeping the headcount at the same level for the last 5-6 years without changing it, okay, despite the significant increase in our businesses, is by itself, a way of saying that, I'm reducing my cost to serve. And I think that becomes very important. So the metric is, what is my cost to serve? What is my cost as a percentage of revenue, margin, profit, whatever? So that metric, I think, is very important for a finance function. I wish I have Tejaswini's, data lake and all that. She gets all the data. It's not very easy for me still.
But you'll get it. You'll get it. It's
someday.
Someday soon.
No, so that's quite interesting. Thank you very much for that, Mr. Subramaniam. Can I come back to you, Mr. Nitin Parekh? As I think you've talked about use of technology and the focus on cost, which and the fact that the focus on cash. You've maintained a very healthy, a very strong focus on that help you improve your positions during the pandemic. Going forward, what are your advice to some of the CFOs or some of the plans which you have for yourself you'd like to share within your own, as you continue to take forward this learnings? Are there specific actions that you have in mind?
So at least for last 3 years, I've been talking in the organization at a senior level, including my peers level, in terms of implementing zero-based budgeting. And my research in India shows, and even talking to many strategy firms, including Big Four firms, that hardly in India any organization would have in a full-fledged manner implemented zero-based across functions, across entities. While in some pockets they would have tried. I think this pandemic gave us the real opportunity in terms of setting the cost base, almost at zero base, whereby now I am asking all the people when looking at that quarter cost, why costs are required to be added. So we have been working on all the drivers of zero base in terms of simplification of processes, avoiding all redundancies. As a part of that process also comes opportunities of outsourcing. So where we say that can we make this cost center a variable or consumption led instead of being fixed. So far as IT services are concerned, our IT is already outsourced long back. In terms of finance processes, currently we are working on shared services division, which initially is going to be in-house, but maybe in times to come, somewhere near term, possibly it will be again outsourced. So that is the process in which we are trying to make cost variable or consumption based. In terms of resilience, I think a number of efforts have been done, and as I talked about the liquidity management, the cost control management. But the challenge which we are currently working is how do we make this cost which are saved as a permanent kind of savings in terms of making is a zero base and a sustainable savings. On that we are working significantly in terms of the amount of the efforts, the number of activities, the number of people involved in that process. I think it's a great work currently going on.
Thank you very much, Mr. Parekh. I think that's amazing thoughts there. Can I come back to you, Mr. Ramesh Swaminathan? I think I heard you talk about leveraging data extensively, and I did hear about doing predictive analytics and prescriptive analytics, some of the things which you're already embarking on. Are there any thoughts of how are you planning to use data as a strategic asset, and how do you use that for finance department in general, or is that going to be an enterprise-wide program? And any thoughts on that, please?
Okay. It obviously is not my. It is bound to be enterprise-wide. The fact of the matter is there's no such thing as a finance strategy. The finance strategy has to kind of mesh into, in fact, the overall strategy of the company itself. And if you know my industry, this is one industry where prices erode continuously. There's a big upside on launch of a product, and after that, it is a continuous downside. So given that, you need to be the last man standing when it comes to, in fact, the cost of production really. So to the extent you need to embrace all those processes that make things more effective, efficient for you. And today, I think the need of the hour is, of course, establishing a digital roadmap for every function around the entire value chain. So be it procurement, supply chain, manufacturing, R&D, of course, when it comes to the traditional areas of finance and all of that. There are a host of things that can potentially be done. And I think the digital roadmap would certainly shake up the overall the foundations of this industry itself. Not merely from a back end and cost of production also, it's also from the front end, and potentially the way you access the doc, access the patients, the channel partners and the like. Technology is also impacting in some ways the product itself. So you have, for example, embedded sensors, whereby you have sensors embedded on tablets that you actually take in, which continuously monitors the way it gets dissipated in the body, the bioavailability of that substance in the body itself, and how does it actually impact on the patient. So there is, so it is all digital all the way. So to the extent, well, some parts of it obviously cannot be absorbed by a generic firm. It's more for a company more into the innovative space. But when it comes to, in fact, the generic space, there's a lot of things that needs to be done to be the last man standing. So it is going to be enterprise-wide and encompassing the entire value chain.
Okay, I think that's quite insightful. I wish we had more time because this is such an interesting conversation which we have been having over the last hour already. I mean, it's clearly the experience of 250 years really is showing up. So thank you very much, all the panelists. We do have a few more questions in the chat box, but I'm not able to take them right now because just in the interest of time, I'll request the audience, questions the audiences who had written the questions to us could get in touch with us offline, and we'll try and solve that there. So with that, I'll thank everybody once again, and I'll hand it back to you, Varun, on taking this forward. Thank you, everybody.
Thank you, Ramit, for nicely moderating the session. And I would like to thank all my panelists for giving us time and being present today. I would also like to thank IBM for initiating this important program. Ms. Richa ji, thank you. And we'll get back to you with more details. And thank you all the participants for joining. Thank you very much.
Thank you.
Thank you.
Thank you. Bye-bye.
Bye.
Bye.
दीपक बंद कर दो.
Okay. Okay.